So Joe Biden just dropped a bombshell on the world, and we know by now the state of the US economy. It is propped up by endless deficit spending and a ton of debt. And when we boil it down, it comes down to two choices. Either you embrace a recession or you keep borrowing money to postpone the financial Armageddon. But things just got worse. Prices are starting to rise across the board again. CPI is up. Core inflation has also risen higher versus a month ago. However, President Biden is willing to destroy the US dollar to prop up the economy. He's proposing higher taxes, increased spending, and even more debt. The total price tag for 2025 will be $7.3 trillion, dollars, and that's simply insane. He wants to spend more money to prevent a recession, and that is his re-election promise. And this $7.3 trillion budget is a 4.7% increase over the current spending in 2024. And everything is heading up. Defense spending will increase by 1%, and discretionary spending will rise by 2.4% as well. And this is abuse of the reserve currency, borrowing money not just from the future but from the rest of the world as well to prop up the US economy. And here's how serious the problem is. At $7.3 trillion, dollars, the budget deficit will hit 6.1% of GDP next year. In other words, 6.1% of economic growth in the US comes directly from borrowing money it doesn't have. If deficit spending drops to zero, it's game over. If the US spends only the revenue they collect, Biden would face an instant recession. So the only option left is to borrow even more. And this is not normal. If you compare this with Singapore, where I'm from, the budget deficit here is only 0.5% of GDP. That's a level of debt that can be easily covered by economic growth. But it is not the same story for the US. When we say the dollar will be destroyed, we are talking about the currency's buying power. The amount of stuff you can buy using it, whether you're buying groceries, a new car, or new home, prices are going to hit higher and higher. And I want to take a moment to crush the argument for higher taxes on corporations and billionaires. Now, that sounds good on paper, but where is that money going to? It's still going to the US government. According to Biden's proposal, he will raise the corporate tax rate from 21% to 28%. There will also be a 25% minimum tax on the ultra wealthy. In total, this should raise almost $5 trillion dollars in 10 years. But the underlying issue still remains. The US government is simply spending too much money. Transferring money from the rich to the government doesn't solve the problem of misallocation and inefficient spending. How will they spend the money? Is it really heading to increase the supply of goods in the US? Or is it going to the military industrial complex? Something tells me there's a ton of wastage already happening. In 2020, the Pentagon allegedly paid Boeing $200,000 to buy 4 trash cans. That's $50,000 per can. That is insane. It's simply crazy. How is this even possible? This increase in government spending is once again going to concentrate wealth in the hands of a few. It will be at the expense of the taxpayer. Biden's budget is going to directly feed into America's debt crisis. And if you think it was bad before, it's going to get much worse going forward. There's a reason why Bank of America is calling for the collapse of the US dollar. They are pointing to the destruction of the currency's value. In absolute terms, the prices of everything will be heading up. We aren't talking about the US dollar index here, but the intrinsic value of the reserve currency, what you can actually buy with it. That's a more important conversation. The US national debt is rising by $1 trillion dollars every 100 days. That is a terrifying amount that tells us the day of reckoning is coming soon. And Biden's 7.3 trillion plan is only going to snowball this mess even further. The debt currently stands at $34.4 trillion, dollars, which means by June, this will be $35.4 trillion, dollars, probably much more. And this is debt borrowed at 4 to 5% rates at a minimum. This is a big reason why the price of gold is flying up. It is why the prices of assets are still rising despite higher interest rates. Biden is inflating asset prices with all this crazy spending. Higher government spending is going to result in inefficiency. Inefficiency means more demand will be created versus the supply of goods, and that starts to beat up prices higher once again. Just because the government spends $1 doesn't mean it creates $2 worth of goods and services. It's likely the exact opposite. Wharton professor sees the $34 trillion debt triggering a 2025 meltdown as mortgage rates spike above 7%. He is foreshadowing the end game, the point when the world starts to lose trust in buying US debt. And when that happens, the biggest debt holders will be American investors and people living in the US. The most important thing about debt for people to keep in mind is that you need somebody to buy it. China, Japan, and even the Fed are starting to buy less and less debt. So the foreign demand for US debt is starting to drop, and to entice people to buy more, yields will have to go higher. America's ability to pay its debt is a concern for nations around the world. And here's why countries are afraid of the national debt spiraling out of control. The most likely outcome to settle the debt is to debase the currency. You print a ton of currency to pay back bondholders, that's the end point. But when that happens, it destroys the values of reserves denominated in dollars. Even if you get a high yield on US bonds for 10 years, if America inflates the debt away, you lose in absolute terms. You can buy less stuff in the market. And that's why gold, stocks, and even Bitcoin, they're all flying to the moon. Countries aren't that stupid, and holding too much US debt is dangerous because the music is starting to end. From the Wall Street Journal, where have all the foreign buyers gone for US Treasury debt? Foreign investors and central banks are offloading their holdings of US bonds. 10 years ago, it was 43%, which is a tremendous amount, but today it stands at only 30%, which means more local investors in the US are holding the bag. More US investors are holding their own national debt, which is very dangerous because the fall of the dollar will hurt them the most. Looking at the real yields of government bonds, we can see the US 10-year Treasury giving a real yield of 2%. That's a 2% return after accounting for inflation. And this is a very generous offer, a very generous rate for US debt versus other countries. That's the rate Yellen has to pay to entice investors into the currency, which ironically balloons the debt even further and pushes things closer and closer towards eventual default. So President Biden's new budget is a catastrophe. It pushes the national debt to unthinkable levels. At the same time, it debases the value of the dollar. The responsible decision is to reduce the US budget. He needs to spend less, but if Biden does that, he won't win against Trump. It's important we understand the debt trap the US economy is sandwiched in. Because of increased government spending, it will be impossible for interest rates to come down fast. At the same time, the US economy can't sustain strong growth without borrowing more money. The White House is predicting a falling GDP, stubborn inflation, and higher borrowing costs. And it's not a surprise here. When you keep spending, your debt goes up, bond yields head up, and inflation can't possibly normalize down. Each time you goose the economy up with government spending, the more you'll need to spend down the road, and that in turn is going to keep interest rates higher than usual. And I want us to focus on the 10-year Treasury note here. In 2024, bond yields are expected to rise to 4.4% before dropping to 3.9% by 2024. So yields are still going to stay high. But look at the next 10 years. Even in 2034, the 10-year Treasury is expected to yield 3.7%, which is way higher than the last 10 to 15 years. The US government will be borrowing more and more at this interest rate to prop up the economy, and this is based on their own predictions, not mine. So on one hand, government spending is rising. On the other, this will keep interest rates higher, pushing borrowing costs to the brink. And what does this lead to? Let me say the obvious. It explodes the interest expense of the debt. Even the White House knows it's a disaster. By 2026, the interest payments alone will exceed the defense or non-defense budget. That is $1 trillion that will have to be borrowed into existence. The national debt is not sustainable, and the default through inflation is coming. So if you get 4 more years of President Biden, it is financial Armageddon. There are the wars in Ukraine and Israel, plus the economic fight with China. Let's not forget about those. All these adventures will cost even more money. It will come from deficit spending. And this is a problem that's becoming unavoidable. The collapse of the dollar's buying power is already here. But there's another crisis we need to talk about, and it's tied to the endless borrowing, and it is the risk of higher rates for longer. During a Senate hearing, the Federal Reserve admitted that the banks are still in trouble. Commercial real estate is the boogeyman hiding in the closet. This is a problem we'll be working on for years more, I'm sure. There will be bank failures, but not the big banks. Powell just told us the truth that more bank collapses are coming. This is doom and gloom from the Federal Reserve, not me. Powell is preempting more disasters now, or he'll get blamed later. And here's the thing about bank collapses. When it happens, it tends to unravel the entire US financial system. It hits balance sheets and could spark further bank runs. Just think back to SVB and First Republic. This will cause banks to suddenly tighten their belts and credit will stop flowing into the economy. A credit freeze could happen that could trigger a domino effect on commercial property, We could see even higher rates for building owners where rents are going down, and that in turn feeds into the collapse of commercial real estate. If we look at exposure of banks to CREs, it is not looking good here. There are four banks which have significant risks on their balance sheet. Banks like Citizens Financial, M&T, and NYCB have 20 to 50% of their total loans in commercial real estate, and these are big banks with over $100 billion in assets. If commercial real estate implodes, more banks are on the hook with billions of dollars at risk, and this shows us how much risk is still in the system. The banks are already scrambling for reserves because a new liquidity problem is starting to build. The Fed's Bank Term Funding Program, the BTFP, has officially ended, and this means Wall Street has to eventually return all the money they borrowed from the Fed, plus interest over the next 12 months. In total, over $160 billion will be drained away from the banks. They will have to take back their toxic treasury bonds and give cash back to the Federal Reserve. This puts them in a very vulnerable position, a situation where they can't take any big shocks, especially from the Federal Reserve. The Fed might not bail them out this time. It's no longer saving the depositors. If the Fed steps in, it's a blatant rescue of the fat cats on Wall Street. We are in a period of extreme uncertainty. Biden should be deleveraging the risk, not increasing them. But he's doing the exact opposite. Joe Biden is compounding the problem with this crazy budget for 2025. By increasing the budget deficit, he's refusing to relieve the pressure on borrowing costs. And by ramping up government spending, he is keeping inflation higher for longer as well. So what does this mean for you and me? Well, if Biden gets re-elected, expect asset prices and prices everywhere, even the grocery store, to keep going up. They will keep defying gravity. At the same time, the risk of a banking crash is going to build. Now, I'm not clairvoyant and I can't predict if this will come to pass. The Federal Reserve could very well bail out the banks again. But another 4 years of Bidenomics is going to be extremely frightening. I know it's unthinkable, but there's always the chance Biden stays in office. Back in 2022, he spent $500 billion using the Inflation Reduction Act, but so far there's been little return. This is money borrowed by selling bonds. He has ramped up demand, but the supply side hasn't really moved. If this is another repeat of the act, we better brace for impact. This will be a world of forever inflation. The eventual debt default will also draw nearer and nearer. But let me know what you think. Why is Biden spending more and more? And how bad is this for the US dollar? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.